Hard to think about the next year in 2023 without considering how shocking some of the events of 2022 have been. We've seen a war in Europe, first time in 75 plus years. We've seen inflation at multi-decade highs across the globe. We've seen essentially mostly globally coordinated central bank tightening policies. As companies are looking to navigate these types of markets in 2023, we have seen some key trends emerging. The first is companies looking to create some certainty on future debt issuances. So a significant amount of companies doing pre-issuance hedging, mainly as a way to protect against greater hawkishness from central banks should inflation not come down as anticipated in 2023. The second big theme we've seen is companies continuing to identify areas where they may be able to reduce interest expense by leveraging cross-currency swaps. And instead of issuing natural debt in some local economies, focusing more on using cross-currency swaps to synthetically convert debt from US dollar to euro, yen, Swiss franc, etc. With the strength of the dollar and the volatility that we've seen, coupled with the fact that only about half of public US multinationals are hedging their foreign currency exposure, one of the big areas of focus for CFOs and treasurers in 2023 is to revisit their strategies around managing their currency risk. One of the trends we are seeing for 2023 is a focus on being prepared, having a playbook at the ready to execute a plan if the board decides, if the market moves in a certain way. The biggest lesson that companies have learned from this year of commodity price volatility is that it is very challenging to put in place a commodities hedging program on your own. It is a team sport. It requires multiple individuals across the organization. More and more treasury staff has been focused on the operations and understanding the tactical implications of the strengthening dollar and the rapid movements in currencies across the globe. Unfortunately, this has not left them much time for strategic thinking and asking some of the big questions that need to be asked and answered in relatively short order. The most sophisticated organizations and forward-thinking organizations have been spending a significant amount of time and resources to streamline their processes and operations, investing in solutions like Chatham Direct to reduce the amount of manual effort that their treasury team is spending and allow them to tackle the more strategic questions. So as we think about 2023, these are some of the events that are in corporate finance leaders' minds as they focus on how to manage risk and how to navigate through the upcoming challenges in the coming years. To learn more about these trends, please click the link to the article.